And so my next step would be, so now that I've successfully created a correct trial balance, I should take this information from the trial balance and I should be able to make all of my financial statements in the proper order. Remember, there's an order for the financial statements. From this perspective, we're only going to consider three. We're not going to do the fourth one, so we're going to do the first three. That would be your income statement, your statement for retained earnings, and your balance sheet. And so we're going to take all of this information from here and create our balance sheet, well, our income statement, statement for retained earnings and balance sheet. So I'm going to go over here, and remember that information is coming strictly from the trial balance. Even though you don't see it, I'm just taking those balances that I posted to the trial balance to create my financial statements. My very first financial statement is the income statement. And as we said, we keep stuff simple. We said that in terms of an income statement, a statement only reports what? Income. And how do we measure income in accounting? Revenues minus expenses. So, we start off with the proper heading. So you always do the company name. You do the type of report, which is an income statement. And the period. Income statement represents a period of time. So it could be a month, it could be a year. And for here, let's just assume it was a month. Okay? So let's say for, you always say for the month ended. So it lets you know we're doing a month. December 31st. Okay? So that's the income statement. So the first thing we're going to report is our revenues. We have service revenue. Taking that number from my trial balance, the service revenue amount is $10,500. Now, guys, I want you to know right now there's no more debits and credits. Debits and credits only go into the journal. This is straight reports. So this is service revenue for $10,500. Then I'm going to list my expenses. Because I have more than one expense, I want to create a sub-column to calculate my expenses. Get it? So what I'm going to do is I'm going to list my expenses under this sub-column. We have two expenses. We have rent and we have salaries. Since it's a sub-column, I'm going to keep it in the inner portion. I'm going to keep its own separate column, the sub-column, to do my additions. So rent would be $2,000 and salaries was $1,200. Then I'm going to calculate a total expense column. My total expenses would be $3,200. You know what? I'm going to post the $3,200 over here because that's what I'm ultimately going to subtract. So I have my total revenues of $10,500 and my total expenses of $32,000. I'm going to subtract them now, and that should give me my net income or net loss. Obviously, more revenues than I do expenses. So that's going to give me a net what? Income. A net income. So I'm trying to subtract this. 10,500 minus 3,200. That gives me 7,300. So 7,300 would be my net income. Of course, if I had more expenses than I did revenues, that would give me a net what? Loss. Okay? So that's it, guys. That's the income statement. In reality, they're more extensive because you have more expenses, but in this example, we only had two. So that's all you need for the income statement. Revenues and expenses. So next, we're going to create the statement of retained earnings. Statement of retained earnings. Now, your statement of retained earnings basically only deals with retained earnings and the things that affect retained earnings. We know there are three things that affect retained earnings. Two items and an actual account. What are the two items that affect retained earnings? Net income and net losses. Those are products of accounts. Net income and net losses are products of revenues and expenses. Net income increase retained earnings, net losses decrease retained earnings. And lastly, we have an account that affects retained earnings, which are dividends. So that's all we're going to report here. So again, we're going to start with the company name, the type of statement, and the date. Retained earnings is a period. The statement for retained earnings is a period. So we're going to say for the month ended December 31st. And what we're going to do is you always list your beginning balance retained earnings. Beginning balance retained earnings. Beginning balance retained earnings simply what you started with this period. So the beginning of the month, what did we start with? This company actually was started in December. So this company did not exist before December. And so because of that, our beginning balance retained earnings should be what? 0. So we start off with a 0 balance of retained earnings, and then we just add the things that affect it. We already said what affected. Net income. Net income affected. So we had some net income from the period. So we're going to add net income. Of course, if we had a net loss, we would subtract that, but that's not the case in here. And which brings me back to why do I have parentheses here? Double backing up to the income statement. Parentheses is just a formal way of subtracting. So anytime you're subtracting something, you should always have parentheses. Your expenses are always being subtracted, so they should have parentheses to signify that they're being subtracted. Okay? And so back to our statement for retained earnings, we start out with a beginning balance of 0. We have net income of $7,300, and then I need to test to see if we have dividends. Of course we do. We have dividends of $5,000. So then I'm going to subtract dividends for the period. And the dividends was $5,000 coming from my trial balance. And so that's going to give me my new ending balance for retained earnings, which happens to be $2,300. So now we have a retained earnings account that's created now for $2,300. And so that retained earnings account, that ending balance for retained earnings, is going to go to our balance sheet. So now we're going to create a balance sheet.